we have a guest host today, and he's someone you've seen a number of times. This is Greg for Teslafaninsight. Thanks once again for joining us. We wanted to have a conversation about Tesla and Gamestop and where we are, where things are going. And we have Brandon. He's going to introduce himself and where he's working and what he does. And we're really looking forward to his input on what's going on right now. So Brandon, could you introduce yourself, please?
Sure. Thanks for having me on again, Greg. I'm happy to be here. Brent Alexander, Scarab Capital, long, short, quantitative, and fundamental hedge fund.
Terrific.
I'm happy to be here.
Thank you once again. This is Greg for Teslafaninsight. Thanks for joining us. Please remember to like and subscribe if you enjoy the show. We also would like to encourage you to consider a Patreon to get more information on better trading and investing. So I wanted to bring a Wall Street guy on board because we've had an opportunity to see a lot of amazing things happening. And a lot of the comments I've made, I'm getting some flaming emails a little bit on what's been going on. And so, Brandon, right now, we're down another 100 points today on GameStop. And I wanted to ask, first of all, where are we in this process and why?
Yeah, so it looks to me like we're in the closing stages of, your traditional short squeeze situation. And, the way a short squeeze usually works, and I think this is just a perfect poster child of a great example of one is, you have a technical situation with short interest so high that artificial demand is created, right? There's such a scarcity of shares that liquidity locks up. And when liquidity locks up, there are only so many shares left and the price absolutely spikes. And we saw it go from, $8.50 to 100 to 200 to 300. And at a certain point, when the shorts start covering, right, that is almost as if it's the last leg of the short squeeze. So when shorts start to cover, they give their shares back to the brokerages that they borrowed them from in the first place. And all of a sudden shares start to reappear. And when shares start to reappear, that specific type situation that, resulted in only so many shares being available unwinds. And all of a sudden there are shares all over the place again because everyone was borrowing them in the first place, right? So it's not necessarily a situation where the longs can quote unquote hold the line. It's more of a situation where the brokerages are now starting to have the shares. So the demand supply imbalance is going back to normal. And I think we're seeing that in the price action.
Well, is it possible for it to go back to normal? Because the thesis that a lot of people were working on is the fact that if they're shorted 140% of the shares, all you had to do was have all the buyers not sell and the price should have stayed high. How come that thesis has not worked?
Because that equation only looks at the longs and doesn't look at the shorts, right? So yes, the longs are holding the line, but there's two sides to every trade and the shorts are closing them. And the way that the shorting mechanism works, right, when shorts have their positions on, there aren't as many shares out there on exchanges and in the market. But when shorts cover, those shares come back into and onto the market. And so just, that's just the other side of that equation. And I would say, in the broader question of how could GameStop see a stable price at a higher level, what's fascinating to me is that underneath of the bubble is a real and genuine turnaround narrative play on a company that needs to do a digital transformation. And so really the long-term bull case is, I think, more centered around that than the technicals around a short squeeze. Because short squeezes come and then they go.
Mm-hmm. And so, again, in theory, the whole idea was all the people that were creating the short squeeze by their action, if they had just held on to their shares, that works for a while and then that disappears. And I guess, again, I wanted to review, why does that disappear in terms of how long, when you go into the short squeeze and how long it lasts?
Sure. So, let's imagine a more simplified scenario. Let's make up a company and say that they have 10 shares. 5 of the shares are held by the longs and 2 of the shares are held by brokerages and 3 of the shares are held by the shorts. if that's 100% of the public float of the company, the longs can kind of do whatever they want, but when the shorts close their positions, right? Before there were 2 shares on the market in this example. Now there are 5 shares on the market in this example. And so when you're asking what's the clearing price, what's the center of the bid ask between, on these remaining 2 shares, then turns into the remaining 5 shares, right? Just almost as you can almost draw a simple demand supply line straight down.
Mm-hmm.
As more shares start to reappear on the market, the demand starts to soften up in the face of higher supply.
Mm-hmm.
Right? Is the demand going to rise to meet that new supply? And I think no.
So we've obviously seen the huge price drop from GameStop here. Where are we headed? I mean, we're at $100 a share right now. In your mind, where are we headed based on the scenario you described?
Yeah, I mean, tough to make a price call on a situation like this, but I think we could be headed back down to as low as $20 a share, simply because, and I don't think we're going to go back down to $3 a share, $8 a share, because there's too much public attention, and there are a lot of contrarians that are going to want to be involved. So I don't think we're going back to zero. I think we're going back to maybe $20, $25, $30 a share.
Okay. You talked about a digital transformation. Can you share what that was and what it would mean here?
Yeah, sure. So, I mean, again, this is what I think is very fascinating about this GameStop situation. So in November, the old founder of Chewy, and Chewy is the dog food and pet delivery service, kind of like the Amazon for pets. Their old CEO took an activist position in GameStop. So he became a controlling shareholder, got a couple of seats on the board, and his whole deal, as it were, was to push GameStop to undertake this digital transformation. And so, when you're talking about a longer term turnaround play, I mean, this is, again, almost as textbook as it gets. You have this, retail, heavy physical assets in an industry that's moving rapidly towards digital, and it's your turnaround play, and it's being led by the old CEO of Chewy, who now has a seat on the board. His name is slipping my mind.
Mm-hmm. Do you think they have a chance to survive that way and make the transformation?
So quite frankly, yes. I mean, we're asking a bit of a different question here. We're talking a bit more about the emerging gaming economy, but I do think that there is a place for a name brand like GameStop in the emerging, video game economy that is seeing, quite rapid growth and lots of attention from advertisers and tournament operators and things like that. I mean, there's an emerging economy, growing around this whole video game thing.
Mm-hmm. I guess when I look at that digital transformation, the challenge that I see there is the fact that you have a lot of really big players like an Amazon, like an Apple. There are a lot of entities that are lurking that are really the dominant players on the digital side. Is there a clear way that they can get in there using their brand to establish themselves?
Yeah, absolutely. Because, I mean, Amazon and Google are big brands and everybody knows who they are. But if you're talking about gaming, I can't necessarily think of a bigger brand than GameStop unless you're talking about the games themselves, your Call of Duties and your Fortnites of the world. In terms of name brand recognition, GameStop is like 3rd or 4th place. And so I definitely think that there's a usefulness there to that.
So the wonderment I'm having here is that it's one thing for GameStop to make games. It's another thing for them to be a game retailer. So they're competing with other big brands for access to content being sold by others. And so I guess what I was thinking about is the way I see things, it's kind of like what's happening right now when we look over on the video side. I met someone that was involved with the licensing of Netflix and movies. And basically Netflix used their initial low price of getting content to sort of build themselves up to actually becoming basically a studio. So then they were able to succeed because when the content was taken away or reduced from the large players, they were fine because they now became a content creator that people were going to for original films and television. And so that's the challenge I'm seeing for GameStop is that I don't see any GameStop dedicated games. They're really riding on whatever brand's name games have been built, and then they're having to buy those from others. So what I'm wondering about is I really don't see how, if Amazon wants to buy, if Walmart wants to buy, if, you know what I'm saying, a variety of folks want to buy, there's going to be a tiered pricing based on how much inventory you move, theoretically, or how many potential users you have. And in theory, the bigger the number, the lower your per unit cost, theoretically. Therefore, you can spread any cost over a larger number of people. A lot of times people charge based on number of seats. There are different ways. So is there a way you're seeing that isn't obvious?
Is it obvious? I think not necessarily, right? I mean, not many of these things are actually obvious, but I think you're absolutely right. And in terms of, if you were to ask me, if you were to have given me the keys to the kingdom for GameStop, what I would say is that they need, digital transformation really is the right word, right? I think they would need to become a tournament operator in themselves, right? If we're talking about how does GameStop survive in the future, the next generation, I could really see as big success in, a nationwide Madden tournament brought to you by GameStop. I think that would get tons of advertising dollars, tons of views. You could probably fill up a stadium with it. I know ESPN has done that, right? So, I mean, just start using that name brand to compete in, I think, the tournament operating space. And you could, there are gamer teams, there are gamer coaches these days. I mean, it's really, they could figure it out. And if it were me, I'd take the tournament angle.
That sounds like a great idea. Let me switch over to the general theme that's around GameStop, because AMC, there are other brands that were part of this process. What do you think of this phenomenon of a website deciding to, in essence, fuel a short squeeze? And what do you think about it becoming a trend in terms of what we see happening more often?
So my take on this is a bit different than what I've seen reported in lots of the media, right? I'm of the belief that the entire Reddit crowd does not actually having enough capital to move these stocks, right? So what I see when I look at this situation, right, and you want to ask the question, well, why hasn't this happened before? Is kind of the question I'm asking, because comment boards and threads have existed for a long time. Perfectly ripe short squeeze opportunities have existed for a long time. So how have we not seen this before? Well, what hasn't existed until recently is the ability for big hedge funds on a large scale and in real time to monitor these kinds of popular chat rooms and effectively front run their popularity because they're seeing everything in real time. I mean, to me, it isn't all that complicated to basically come up with some equation that ranks the different tickers that are mentioned after you scrape a message board by their level of apparent interest on the chat board, and then you just make the trades right then. Right? So, I mean, these kinds of quantitative systems definitely exist, and when you're a couple $1 billion hedge fund, it's really not that big of a deal to put $1.5 million, $2 million on this kind of new-ish trading strategy that is utilizing crowd psychology and the ability to monitor these kinds of Wall Street bets threads in real time and make actionable decisions off of them. So to me, right, I think kind of that's what we're seeing. If I'm a hedge fund and I want to make this a huge thing, I'm using Wall Street bets as a cover for doing my short squeeze operation because they do make all of the noise themselves. I mean, it's just in my mind, that scenario fits hand in glove. And I think it's a much more, likely scenario for why we're seeing what we're seeing playing out.
So we're likely, you think, see more of this going forward based on the success of this round?
I think so. I mean, I think if other hedge funds hadn't woken up to the idea that you can make a lot of money scraping social media and trading, I guess, off of these sentiment swings in real time.
Mm-hmm.
I mean, a lot more do now,
Mm-hmm.
a whole lot more do now, and it's a matter of just recognizing that the technology exists. I mean, some of the most impressive technology I've seen is a literal narrative map that these funds can look at, where they can say, okay, what are people talking about? How much are they talking about it? What other topics are connected to, these things that are being discussed, and you can parcel and make it very specific and very sophisticated.
Mm-hmm. I want to
I
pause.
think that's the future.
I want to pause just a second so you can remind everybody the name of your the firm you guys put together, as well as talk about your Patreon page.
Yeah, sure. So in August, I launched my hedge fund, Scarab Capital, LP, not Scarab Capital LLC. That's a fund of funds. I do long, short, kind of traditional investing. As far as content that I'm working on coming out in the future, I'm working on a Black Economic Progress Index to kind of focus the conversations around, Black economics and Black progress, and try to make it a bit more quantitative and a bit more focused. And that's something that I would be anticipating coming out the first half of 2021 is what I'm pushing for.
Mm-hmm. Great. Thank you for referencing. And we also will have some information for Brandon below this page, so you can touch base with him if you're interested in his work. And please support him on Patreon as well. What's the name of your Patreon, by the way? Or do you have it set up yet?
I have it. I got my Patreon secured, so I'm pretty sure it's Scarab Capital. But anyone can reach me if they wanted to reach out to me. Giles, Jiles, at scarabcapital.co.
Great.
And we can, have that on later.
Terrific. What do you think of, so the way I was hearing the narrative of what happened from one of the folks was we really wanted to punish, the goal here was to punish the hedge funds for shorting these stocks. So I had heard because they're oversubscribed to the 140% of the shares were shorted. The suggestion was all you had to do was buy 100% of the shares and hold them, and the shorts would be punished unmercifully, and you would make money in the process. So, just to review one more time, there's a reason why the stock is falling, even though those that agreed to not sell haven't sold. And it's the answer you just described, that there are shares out there to be had.
Absolutely, and there are shares that are reappearing in spite of the fact that the longs haven't sold because the shorts are covering.
Mm-hmm. The other thing you talked about was why does the short end? Basically, you pointed out that the price articulates the fact that the short is over, and why doesn't it continue? Why does it just end?
Because there are only so many sellers and only so many buyers. I mean, right? So when you're looking at how markets tend to generally trend over time, right? These markets tend to trend with how many aggressive buyers are there versus how many aggressive sellers are there, right? Kind of that old school, the longs versus the shorts kind of conversation. So it's an ever-changing and evolving dynamic, and it's just, eventually the buyers run out. They're just, the buyers are all in. And after the buyers are all in, the buying pressure that's underneath begins to dissipate. And that is purely just how markets function.
So the only way it could really continue is if somebody actually went in and bought the company, and that would really do the job because you take over all the shares.
Right. It would take sustained demand at a higher price level, which fundamentally would represent a much higher earnings potential, right? So when you're walking this thing backwards, you're starting to bleed further and further back into the fundamentals, which also continues to fuel the short squeeze drive down, because if I'm remembering correctly, GameStop had like a $200 million net operating loss last year, right? So as you start to walk back away from the short squeeze technicals, and you get on the back end of it and you start talking about the fundamentals again, I mean, these are all catalysts to drive the price down further.
So my argument that I made was that GameStop is in a position where if their locations are closed in the malls, they still owe for that rent payment, even though they have no revenue coming from it. So for those locations that are operational, the limited number there are, they can't foot the bill for all the locations that are closed or shut down temporarily or that are doing poorly because of COVID.
Yeah, I mean, GameStop's current business model is, let's say, not very strong, which is how they ended up with 130% short interest in the first place.
Mm-hmm.
And the idea that you're going to punish the shorts works on the surface level, right? Like it works on a level where you're going to say, look, that's aggressive positioning, no matter which way you try to cut it. Like, almost no matter who it is, 140% short interest is aggressive positioning. So, that's a ripe short squeeze situation. But, as I was saying before, short squeezes come and then they go.
Mm-hmm. So, will this punishment result in shorts stopping their short squeezing or not, or stopping their shorting of stocks or not?
Yeah, absolutely. And I mean, that's where the punishment narrative starts to fall apart, because any hedge fund worth their salt has risks sizing on all of their trades, and there's only so much loss it's going to take on any individual trade. So even when they hit that threshold, everything is still within the context of normal operations.
Meaning that the punishment inflicted isn't going to affect them long term, or what do you mean by?
Right. I mean, effectively, essentially that. I mean, for the Melvin Capital was hit headlines a lot when this thing broke off, and it came out not that long ago that Melvin Capital lost 100% on that trade. And when you take aggressive positioning, losing 100% on a trade is not the end of the world. I mean, that your system needs to be designed to be able to handle that, and I think theirs is. So you just move on to the next trade, and that's very much the business.
So you're saying that this punishment inflicted by individuals is an everyday occurrence, and therefore they're going to get back to the normal business of shorting the next stock without feeling like they were punished in any way. Is that?
Yep, absolutely. And if I'm willing to bet that the next stock they're going to short will not have a name brand. Mm-hmm. They're not going to pick a short, we're to guess, that is easily recognizable to the retail audience.
I guess one other question, last one maybe that comes up, is Andrew Leff, who's one of the big shorters here, pointed out that he'll no longer be offering a list of the stocks that he's shorting. Any opinions on that?
Yeah, I mean, this topic of conversation really gives me kind of headaches, because there's a lineage of ideas that begins with kind of the idea that short selling should be illegal, and that's something that I really disagree with. But certain people do feel that short selling should in fact be illegal, and having a short fund essentially stop sharing their shorts is almost the logical conclusion of that trend, right? The logical conclusion of saying, well, this shouldn't be allowed, or it should be legal, or this hurts certain companies or people, whatever it may be. I mean, yeah, if I was in his position, I'd do the same thing, because it's not worth the trouble. And he's going to keep shorting stocks, and he's going to keep making money, but, I would do the same thing. It's not worth the trouble. It's not worth the trouble at all. It's not worth being villainized over, just to have a financial publication. Better to just not.
Mm-hmm.
And if I may, I mean, to take it one step further, that hurts markets. That hurts market functioning, because that hurts market liquidity. I mean, you want to talk about how scarce information is when you talk about private equity firms and hedge funds and all these kinds of things. The more information that's out there, the better markets can function. So this kind of rhetoric can, it's not, anything seriously detrimental, but it certainly doesn't help market functioning.
Definitely makes sense. I have to say, I really feel bad for the people who've lost money in this process, because it sounds to me like they were sold a bill of goods, namely the fact that them buying and holding would establish a short squeeze and they could simply keep the short on. Any suggestions for the mom and pops or small investors in this regard?
Yes, I would remind them that even, Sir Isaac Newton bought into the tulip bubble that persisted and was very popular towards like the end of his life.
What was
I
the
forget
tulip
exactly.
bubble again?
Yeah, so it was Sir Isaac Newton's time where he lived. I forget, exactly which year that is. I'm gonna get in trouble for that eventually. But towards the end of his life, there was a tulip bubble, right? And it's one of the strangest bubbles in financial history because it reached a point where that an individual one of those flowers was worth more than like people's entire residences. I mean, it's really, really it's a bubble for the books. And even Sir Isaac Newton lost a lot of his fortune late in his life buying into that bubble. I mean, he made a bit on the front end, and that fear of missing out. Everyone falls victim to that. Fear of missing out, emotion and feeling. Even people as smart as Isaac Newton.
Mm-hmm.
So, with that in mind, I would try not to beat yourself up too much about it, and remember that these stories are as old as time itself.
Mm-hmm. Nice.
And you can draw them all the way back to when calculus was first invented.
Wow. Interesting. Wow. Well, this has been a shocker to watch this happen. It's unfortunate to see the other side of it. Hopefully, GameStop took the $200 million loss last year. Hopefully this digital move might help, or perhaps reopening of some of those facilities would also be helpful in their process. But, I guess we're going to be seeing more of this. I guess one last question that popped up is, what did you think of Elon choosing to tweet out regarding GameStop and then the $5 billion it added to the value of GameStop in the process? Any thoughts on that?
Yeah. Elon has said publicly and makes no secret that he does not respect financial regulators. And he's a bit of a troll. And this is what trolls do.
Mm-hmm.
So I really wouldn't chop it up to anything more than that. I mean, this guy, amazing guy, uses Twitter and things like that to kind of express himself and to be a troll and this is just a sense of humor. And that's exactly what I take it as. I take it, him tweeting about this stuff and, what he has to say is him expressing his sense of humor.
Mm. So you're saying he was being funny. He wasn't trying to get his people to buy GameStop to do some of his bidding. What are your thoughts on that?
Yeah, no, I think he's being funny, and I think he's poking fun at specifically the financial regulators themselves.
Mm-hmm.
And has no qualms about giving them a harder time by doing something as simple as sending out a tweet. I mean, that just follows logically to me.
Mm-hmm.
If you don't respect the financial regulators and they don't like you don't like them, they don't like you either, and you can troll them a bit, you're going to troll them a bit. That's just what you can.
Mm-hmm.
If you're that kind of guy, that's what you're going to do. And I think he's done it many times before. I mean, that's exactly what Take Tesla Private at 420 was. I mean,
Mm-hmm.
he's just being himself. He's just joking.
Wow. But there are a lot of people that lost money behind his joke because they dove in on the stock as a result of his tweet.
Yeah, and that people are never not going to do that. I think is half of the truth, but the other half of it is people just got to pay more attention and think harder about what's actually going on here.
Mm-hmm.
Elon, think about it. You think Elon Musk is buying GameStop in his personal account? I think not.
Mm-hmm.
I think not. Is he telling his financial advisors or whoever, because he's the richest man in the world now, right? He's not managing his own personal account. I don't even think he wants them touching GameStop. He's just trolling.
Mm-hmm. So you don't think there's any chance he'd whip out his own cash and buy a bunch of GameStop to help support the company as they figure out their next plan, huh?
No, I think there's virtually no chance of that.
Mm-hmm. Okay.
I could be corrected on that, but
Mm-hmm.
On record now, I'm going on record saying no.
Mm-hmm. Interesting. Wow. Well, Brandon, I really appreciate you taking time out. Please remember to like and subscribe for quality content, like folks like Brandon on our show, to share with us what's going on. We look forward to catching up with you in a couple of weeks, see how all this shook out along the lines of what you described. Please remember to like and subscribe. This is Greg for Teslafaninsight. And in Jamaica, we say, enough respect, walk good man. Have a great day, and bye for now.